higher price of oil. This is very late cycle sort of behavior. And I know this is going to sound horrible, but you don't want to own gold. You don't want to own stocks. You want to own dollars. There is going to be a period of time where things like Bitcoin and stocks are going down, but then it's going to go like really high. Traditional finance people laugh. Even the conservative math, you're talking Bitcoin at 350K. Million is easy. Bitcoin could be 10 million. It's going to make 2020 look pretty tame. We're kind of at the end of the road. There's no one left to kick it up to. There will be a reckoning. You're talking Mad Max levels of dysfunction.
You have actually said that right now you think bonds might be a better investment than Bitcoin.
No.
Oh.
I wouldn't say that. But when it comes to TLT, that is a trade. That is, I spend an ungodly amount of time, 10, 12 hours a day, 7 days a week, looking at data, looking at charts, looking at prices, looking at all this stuff, right? So this is something that I am doing as a trade to hopefully make more dollars, right? Which I can then sell to buy more Bitcoin and gold. I want more gold as well. And so this is a trade. This is not an investment. Bonds, especially TLT, especially 20, 30-year bonds, so the duration is horrible investment in my opinion. Horrible. Could not be worse. So I know that's like, well, then why are you buying TLT? It's just a trade. The idea being that, number one, as a trader, I think this chart looks like really, really good. And I didn't want it to look good, right? I was in the camp of debasement trade and de-dollarization and hotter, nothing stops this train. And right, I was in that camp before it was even a camp. I was way ahead of the consensus on that. But then in 2025, I started to hear it become consensus. You started to hear, debasement trade and de-dollarization and all this kind of thing on CNBC and some not super intelligent people saying it. And I was like, oh boy, you'd never want to hear your framework being put out as the consensus, because then you're near the turning point. And so, I would say, I pretty much nailed the move in the dollar. I was calling for a weaker dollar and all that kind of thing at the end of 24 into 25, pretty much nailed that. But then I was like, okay, now I'm hearing it on CNBC, de-dollarization, hotter inflation, financial repression, right? All that kind of stuff. Super bearish, the long end of the yield curve, which is what TLT, this shows the bond price, right? So in case people, the bond price is inverse to the yield. So when you're buying something like TLT, you're buying the actual bond, and the price is going to be inverse to the yield. So obviously, TLT in the long end of the yield curve has gotten absolutely crushed. If you bought bonds back here, you're down like 40%. Now, to me, I think that the risk reward calculation here, this is adjusted for dividends. Here's the price. I think this chart looks really good. I think it has been basing here. This is kind of roughly equivalent to 5% down here, this kind of low. We hit 5% recently and we have bounced, meaning yield down, bond up. I think that the risk reward of this trade is really, really good, versus something like semiconductors or the S&P 500 or kind of go down the list. I think the risk reward on all that is horrible. And that is, kind of a longer conversation. But I think that, higher price of oil, as I was showing earlier, this is very late cycle sort of behavior. You look at like real retail sales, for example, which is 70% of the economy is consumer spending. Real inflation adjusted retail sales has been moving lower. So it's not 10 years, 10-month moving average. But, there is notable signs of weakening in certain corners of the economy. Obviously, AI data center CapEx is propping everything up. Without it, it would be 0%. There's kind of a lot to get it. I think the yield curve is going to start to bull steepen here as we get rate cuts that I think are not consensus right now. If you look at the 1 year minus Fed funds, there's an 11 basis point spread, meaning the 1 year is 11 basis points above Fed funds, meaning there's half a chance, about 50% chance of a rate hike over the next 1 year, which I think is, I think that if they were to hike rates, it would be the most bullish thing for TLT. Not in the short term, but like if they hike rates, we're going into an even worse recession. I think that kind of globally we're going to see a slowdown in growth. And during a period of deflation, what you want to own, and I know this is going to sound horrible, but what you don't want to own gold, you don't want to own stocks, you want to own dollars. That is what performs well in periods of deflation. Purchasing power is going up, right? So generally, we have inflationary periods of time, and the purchasing power of the dollar is going down. But during a period of deflation, you actually have purchasing power go up. And I'll show people, back during the Great Depression, I'm not calling for a Great Depression in terms of a growth slowdown. I'm not calling for anything that severe. But during the Great Depression, the purchasing power of the dollar increased by 68%. So we are used to this part, right? As Bitcoiners, this is the part we focus on. But it's important to remember that it is possible to have the purchasing power of dollars go up. It's just rare. You need deflation. You need a severe recession or depression. And I think that globally we're going to get a recession. So generally, you want to own dollars, but in periods of deflation, you don't want to own anything risk, whether it be stocks, whether it be even gold, doesn't necessarily do too well in periods of deflation. You want to own dollars. I know that sounds crazy, but that just is what it is. In periods of deflation, you want dollars. But what's better than dollars is interest-bearing dollars in the form of bonds. That is why, if you look at, going into 2008, what was happening going into 2008, bond yields were coming down. And the reason bond yields were coming down was because people were trying, think about it this way. If you know that the US economy is going into a recession and growth, there's going to be, call it 1% deflation. Well, if the economy is shrinking 1% per year, I mean, stocks are not going to do well. They're going to be going down. You don't want to own stocks. If the economy is shrinking at 1% per year and you have deflation costs going down 1% per year, and you look at, let's just pick one, a 2-year treasury yielding 4.9%, over the next 2 years, you can buy that 2-year treasury, lock in 4.9% for the next 2 years, and you're going to have a positive real return of 5.9%. Well, that's a pretty good prospect, even just 1% deflation. But you get 2% GDP contraction. Now your real return went up to 6.9%, which is a really good risk-free return. Now, you generally don't want to own bonds in inflationary period of time, which is the usual, but ahead of a recession with deflation, you get a positive real return. And so that is why bond yields always start moving lower, is because the price of the bond is moving up, because people are flocking in, trying to lock in that interest ahead of an economic slowdown where there's going to be deflation. So, in periods of deflation, in periods of recession, economic contraction, you want to own dollars. Bitcoin's probably not going to do well. There is a case I can make for Bitcoin doing well, and I didn't sell my Bitcoin. I'm still holding it because there is a case where Bitcoin is the only thing that goes up, pretty much, other than bonds. Maybe Bitcoin is the only thing that goes up. There is a particular environment where that could be the case. So I don't want to sell my Bitcoin or go short. But I do think that, like, if we go into a global slowdown of the degree that I think we will, you don't want to own risk assets. Like, we might look at Bitcoin as money, but 99% of market participants are going to short the hell out of it because they don't look at it as money. They look at it as a 3x levered NASDAQ, as a high beta speculative asset. That's how, it doesn't matter that we look at it as money. They don't. And so this argument of like, well, Bitcoin is money and it's therefore going to go up in deflation, like, it's not how 99% of the market participants view it. So, but that being said, I don't want to have no exposure. I don't want to sell any Bitcoin. But my hope is to, the ironic part about it is my hope is to be able to capture a dollar gain in terms of bonds, in terms of a trade, because I also have call options on TLT very far out, June of 2027. My hope is to make money in dollar terms that I can then, hopefully Bitcoin will be down because there'll be a recession and kind of, poor growth outlook. So Bitcoin, my guess, my hope is it'll be lower. And so I just made dollars that I can then buy even more Bitcoin at a lower price. Because if we go into a recession, this is just, and again, that's why I gave the disclaimer, is that this is not something I would recommend any kind of normal person trying to time all this. Because if we go into a recession, which is kind of my base case, pretty high probability, we're going to have a fiscal deficit of like $5 trillion. Because in a recession, expenditures go up, revenues go down. And so we're already running a $1.8 trillion deficit. That's going to probably go to 4.5, 5, maybe even $5.5 trillion per year of new US Treasury debt that will have to be issued and purchased by the market. You don't want to go buy a 30-year US Treasury from the government and lock in an interest rate of 5 right now, because inflation is going to be 7, 8, 9, 10, 11. They are going to financially repress bondholders, because in a recession, not only did your fiscal deficit explode to $5 trillion, but private credit, private equity is blowing up. That's another $5 trillion. You have the $12 trillion mortgage market blowing up, right? You get the picture. A bunch of people losing their job to AI. You need to fund UBI or some version of enhanced unemployment benefits. That's going to be trillions. You start thinking that through. There's an ungodly amount of money that is going to have to be printed in the case of a recession. So you don't want to go buy and lock in a 10-year, even a 5-year government bond and lock in an interest rate today, because over the next 2, 3, 4, 5 years, inflation is going to be higher. They're going to have to require that bonds have a negative real rate of return, meaning inflation is higher. Now, especially with call options, if I'm correct and TLT rallies here, over the next year, I have TLT shares, which are earning 4.95% in risk-free, dividend. And, when we had a period of, when we had 2020 and rates were taken very, very low, TLT reached 170 on a price return basis. Right now it's at 85. The risk reward of that, right? Given that they cannot allow interest rates to blow out. So you have the Fed behind you and below you, the Fed put, right? They will not allow bonds to collapse. They'll print the money, and again, that's why you don't want to actually own the bond. But as a trade, that means that bond, if you can time the low, interest rates go lower, these bonds will go up in price because they're inverse to the yield, right? So it's a trade. It's not an investment, and it's only something that I am doing because is not some. The average person is probably, not to give financial advice, but probably best served to just dollar cost into scarce assets like gold and Bitcoin. I do think that people should have maybe some cash. Like this is what I tell my family, because, you want to be able to buy dips, whether it be Bitcoin, whether it be, I don't know, maybe you like Boeing or 3M or Costco stock, there will be, or real estate, there will be dips that you will want to be able to purchase. My hope is that TLT will rocket. My call options will, 30x, 40x. My shares will be going up. And at that very moment, growth is going to be horrible. So, Costco stock is going to be, plummeting. Home prices going to be plummeting. I can rotate those dollar gains into scarce assets like Bitcoin, gold, and hopefully a home. So it's all like, there's a ton of nuance, and I would definitely say it's a trade rather than an investment. Bonds, are probably the single worst investment that people could make as an actual investment for the next, I don't know, 5, 10 years. There might come a time where, deflation is allowed, but we're so highly levered and there's so much debt and it's so unproductive. We're not going to get a Great Depression, where I was showing a purchase. Like that can't be allowed to happen. You're talking Mad Max levels of dysfunction in that kind of situation, given the debt and given the kind of structure of the system today.
Yeah. And I mean, I think you're right. A lot of Bitcoiners don't look at themselves as traders. They know that a recession probably will come, things will crash, but at the end, the Fed is going to have to respond by doing the big print, and that will push Bitcoin much higher.
I'm just trying to be super cute, right? And hoping that I can time it where TLT goes up, there's deflationary impulse, bonds rally, so I have more dollars. Risk assets like Bitcoin go down, right? So that spread, now I can buy that much more Bitcoin. I'm trying to be cute. Maybe it works, maybe it doesn't. I could be a total idiot and it could all blow up in my face and I could get it wrong. Bitcoin could rip from here and I would have been better off buying, that is very possible. I just want to make that clear. Like, this is not an easy world, to try to forecast nowadays.
You'd be a quadrillionaire if you knew all the answers, right? And so I guess I want to end this conversation on the question. You said that there could be a scenario where everything goes down except for Bitcoin. What does that world look like? And what is the price target if that is so?
Everything goes down but Bitcoin?
Yes. You said that's why you don't want to sell it all. You want to hold on to some right now, even if a recession might be coming.
Yeah. I mean, it would require like 20 different variables all playing out with the right, because in global macro, there's so many permutations. There's tens of millions, maybe even billions of permutations, right? Because you're talking 10,000 different metrics in each country, and the permutations. There are so many possible outcomes in global macro that to have a world where Bitcoin is the only thing going up, it is possible. And I could make the case. It would be quite complicated, right? With this condition, this condition, this condition. There is a world where you could see that. I think it's probably pretty unlikely, but it's not zero. And therefore, in my opinion, Bitcoin, and I view Bitcoin kind of as this way, regardless, which is it's kind of call option to hedge out the right tail. A lot of people, if you're in the stock market, right, and you're fully invested in the stock market, you want to hedge the left tail risk, right, which is that stocks crash. You get a Liberation Day, stocks crash. You get a 2020, stocks crash. You want to hedge out your left tail risk, right? And people do that with bonds or cash or put options. But there's a right tail risk, especially now, which is that we are 125% debt to GDP, $1.2 trillion of interest expense, $3.5 billion per day of interest expense. Fastest growing budget item. You have these bloated entitlement programs that as a share tax revenue are just going up and to the right, meaning they're going to have to print a lot of money, and God forbid we ever get a recession, because in a recession, that spread, the nominal growth rate relative to the rate of or the cost of the debt, that spread blows out. And that's why debt to GDP goes up. That's why we run such large deficits generally in a recession. Generally, we don't run these huge pro-cyclical deficits. So it is not good, and you want to make sure that you are hedged for that right tail risk where they print a lot of money. You want to make sure that you are hedged for that. I see Bitcoin as a great hedge for that right tail risk. The NASDAQ correlation that everyone talks about, I don't like it, but I recognize that it's a reality. And look, part of the reason the S&P 500 and NASDAQ are going like this, Bitcoin's benefiting, but it's certainly not getting hurt from this vertical price action in the equity market, right? We're not getting vertical price action, but we've been moving higher. We've actually outperformed the SPY, gold, and treasuries going back to the start of the war, which is huge news. that no one is really hitting on. Yeah, we're not going straight to 100, but we have outperformed gold. We've outperformed SPY in the stock market and US treasuries. We've outperformed everything except oil since the start of the war. That is huge. And so, in addition to the kind of financial return profile and the fact that it's a great kind of hedge to the right tail, in addition to that, it's also, money that I can just memorize 12 words and take with me anywhere. And it's uncensorable, and all the properties of it as money that I think most Bitcoiners understand. You have that as well. So, in my opinion, from the financial side and the kind of Bitcoiner side, I never want to not have Bitcoin, I guess, if that makes sense. And like in the next recession, there's a possibility it goes to, I don't know, like it depends on a lot of things, but it probably goes lower. If the NASDAQ is down 30%, 40%, Bitcoin's probably going to go down. Like, I haven't heard a convincing argument for why, in the face of stocks going down 40%, Bitcoin will go up. Kind of makes no sense. When you look at how the vast majority of market participants view Bitcoin, which is a high beta speculative asset, it'd be one thing if everyone viewed it as money. Because if everyone viewed it as money, then yeah, it'd go up probably, but they don't, so you're probably, I don't know, like we could see 40, even see 30. It depends on a lot. But then, right, you want to be able to buy that dip, because then it's going to be like 2020, where we get this huge kind of V bottom. Liquidity is going to explode much more than 2020, in my opinion. And that's how you get like $1 million Bitcoin, $2 million Bitcoin. That's how you get it. Is we're kind of at the end of the road. Like I've been phrasing it in the way of a recession is a margin call on the US government. As Luke Groman has pointed out, blew a stock market bubble, that burst, we kicked it upstairs to the mortgage market, blew a bubble there, that popped, and then we kicked it up to the sovereign, right, to the US government. There's no one left to kick it up to. This is there will be a reckoning, and the way that they'll deal with the reckoning is financial repression. This is why, going back to what we were talking about with bonds, this is why bonds are like the single worst thing to own, is because what they're going to do is they're going to run nominal growth, which includes inflation. They are going to have to run nominal growth above the cost of the debt, right? And this is how we got out of World War II. It's called financial repression, where you're inflating the debt away. And generally, yield curve control, QE, all that kind of stuff, capital controls, all that kind of stuff is likely. In that environment where, we have this deflationary impulse, I think is coming over the next 12 to 24 months, have that, get, a slowdown in aggregate global growth. You get that. And there is going to be a period of time where, things like Bitcoin and stocks are going down. But then it's going to go like really high. Just because the amount of money they're going to have to print, the size of the problem just kept getting bigger. It's like a bullwhip. If you had 100-foot bullwhip, you were to whip it, the amplitude of the waves right next to your hand here, the amplitude is pretty small. But as you get further out, the amplitude is getting bigger and bigger, both the wavelength, right, the distance between the peaks, but also the amplitude. The scale of this problem just keeps getting bigger and bigger and bigger. And the amount of money they're going to have to print, I mean, it's going to make 2020 look pretty tame. And I think that could be the moment too, because what we really need for Bitcoin to really money printing is part of it, but we really need like that final kind of loss of confidence in US treasuries, in the dollar, in the US government itself. We're getting there. More and more people are getting to a point where they're normal people. More and more people are getting to a point, but like we need that like inflation repeat, that 2020 repeat, where people are just like, okay, like it's too much. And that is, I think, where Bitcoin adoption really does really, really well. And God forbid they try to do capital controls or something, that'll just drive even more demand for Bitcoin. So like, I think that kind of they're locked into this kind of certain path. And I think that path is going to lead people into Bitcoin, if that makes sense. And I think that that adoption plus all the kind of financial and economic stuff, money printing, liquidity injection, yield curve control, all that, I think the two of them in combination is kind of what gets us to 1 million. I think it's entirely reasonable. Like traditional finance people laugh. I saw someone the other day literally like chuckle at $1 million price. It's like, even the conservative math that I've done, I would like to say I'm not an idiot. I'm a very data-driven and numbers kind of guy. Even the conservative math, if we just take out kind of normal M2 growth, normal M0 growth, you're talking over the next 10 years of Bitcoin at 350K. Just like extrapolating normal rates of growth and conservative CAGRs. If Bitcoin doesn't change as share of total global assets, you're talking 350K. If Bitcoin grows and starts to eat away at gold and silver and real estate and bonds, 1 million is easy. Like, I know it sounds crazy to them, but it's, if you do the actual math, if you look at all the actual data, it's really not that crazy. 1 million over the next 10 years, especially if we get this kind of margin call sort of situation. If we start seeing sovereigns adopt Bitcoin in terms of a kind of new trade framework, a new global monetary order, which is a kind of whole other thing I've been talking about. If we see that, which we're already seeing with gold, if Bitcoin starts to work its way into that, now it needs to be a much larger asset in order to serve this role. But if we start seeing, 10, 20 years from now, deficits being settled in gold and Bitcoin, I mean, Bitcoin could be 10 million per Bitcoin. That level of adoption, which is, I think, the final thing, right? Like, we got to get normal people to adopt it. That's kind of the first project. And I think that the next kind of financial economic crisis will drive a lot of that. But then the next step, the final step, is the sovereigns. And I think that, that adoption will come. It's not going to come in the next year, probably. But it's kind of already seeing signs around the edges. But I do think that generally over the next 10 years, we're moving away from the dollar as reserve currency. We're moving away from even having a reserve currency, right? We're moving to a world where there is no reserve currency. People own gold in their FX reserves. They got gold, they got dollars, US treasuries, they got euros and yuan. They got everything, and a lot of gold. And then eventually, I think Bitcoin. That's the direction things are moving. And bilateral, trade deficits will be settled in neutral reserve assets like gold and Bitcoin over the next 10, 20 years. And that'll drive currencies to their fair fundamental value, kind of on a balance of payments sort of way, the way it used to work. And like in that world, Bitcoin could be, easily over 5 million per Bitcoin.
There we go. Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 cents in the chat. See you next week.